Welcome back to the channel, everybody. I am Mick Alphanine. So let's begin right here on Cointelegraph.com. Once again, Ripple makes another huge move. If this is not big, I don't know what is. It's titled, Ripple to demonstrate tokenization in Hong Kong Monetary Authority's EHKD. That's their Hong Kong dollar, their electronic Hong Kong dollar. We should really call it digital, but they can call it whatever they want. It says a pilot program using new CBDC platform. Let's scroll down here. It says the Hong Kong Monetary Authority is looking at retail CBDC use cases, such as the equity release of tokenized real estate assets with Ripple's new CBDC product. Then I say, haven't I been saying that these companies are sitting on things? They're holding it back, waiting to release it a little at a time. Can you imagine what's going to happen when we win the SEC case, if there's regulatory clarity? Can you imagine what they're going to unleash then? And it's not just Ripple. I know it's not. A lot of these companies are holding back, but let's scroll down here, read this little tidbit. It says Ripple will participate in the Hong Kong Monetary Authority's digital Hong Kong dollar central bank digital currency pilot program by showcasing a real estate asset tokenization solution. The company will reveal its new CBDC platform at the same time. So two things at once. Ripple will partner with Taiwan's Fubon Bank, another bank, and others to demonstrate equity release with tokenized assets using a retail version of the EHKD CBDC. Equity release. Let me continue on. I'm getting a little too excited. Equity release, also known as a reverse mortgage, is the practice of a lender letting a homeowner access to equity in their home, with payment coming due only when the house is sold or the borrower dies. Tokenization can reduce friction in equity release process and speed throughput for banks, Ripple said in a statement. The company is participating. Wait a minute, pause. Now you see how they're doing that for this, right? This is regular homeowner activity, right? Can you imagine how much we could benefit the commercial real estate industry, which is having a hard time right now? You see where this could go? The commercial real estate, and unfortunately, the U.S. is kneecapping itself, but we would run wild right now with something like this. We would run wild right now. Why would we not be able to do that in the future? All we got to do is get past this case. Can you imagine the capital that would flow? We're going to get to an article later just to show you what I'm talking about. I mean, they finally had to bring down the prices on commercial real estate. That's about to be a problem for a lot of the banks. Look it up for yourself. But could you imagine if we could provide the solution? And we can. But once again, hey, the United States is kneecapping itself. What do you want us to do? But our time will come. Right. And we will move a lot of that capital. I don't see things getting better because unless the minds change, and typically that's not going to happen with who are the regulators and heads of companies and, leaders in politics. You will have to literally swap them out. So I don't see significant changes coming anytime soon or solutions coming anytime soon. So that means possibly when we're loosed, when we're able to play, right, deploy different things, that problem will remain, and we still will be able to get a piece of that value because we have some of the only solutions. You get where I'm going? Okay. It says, quote, experiences coming out of the Rail 2 pilots will factor into any decisions by HKMA to go live with an EHKD at a later date, Rail 3. Quote, Ripple Vice President of Central Bank Engagements and CBDC's James Wallace. What did I tell you? Listen, I know a lot of people are veterans to XRP and Ripple, but if you're not, this is an individual whose name you keep in your mind. When James Wallace does a conference, that's the ones to watch because he's always trying to close a deal or bring in a deal. He's always saying something powerful and significant because of that position. Vice President of Central Bank Engagements. So when he speaks, he's not playing around. He's all business. And a lot of times, when you see his name, something significant was said or done. Let's continue on here. So the pilot project will run on Ripple's new CBDC product, the Ripple CBDC platform, using a new private ledger with XRP ledger technology. Wait, remember what David Schwartz said. All the XRP is the same. There can't be two different prices. So, he put that to bed, that worry to bed that, well, the private ledger will have one price XRP and then the public ledger will have another. No, one price for all XRP. All right. So that's what David Schwartz said. You can look it up for yourself. All right. Okay. So it says here, Hong Kong started its CBDC research in 2017. All right. We're going to stop there. We were going to stop there. They have a lot more here in this article. Once again, it's on cointelegraph.com. Let's move to another article here. We got a lot of big stuff to cover today. Things are looking very, very good. I know there was a little bit red in some of the different holdings, different assets. That's because the dollar was strong. The dollar was strong. So when the dollar is strong, gold comes down a little bit. Platinum might come down a little bit. Don't get me wrong. Platinum did go up for a little bit today. Platinum is just wild. It can't control it. That I love about platinum. But it was red for a little bit of today too. Gold went down. Bitcoin was red for a little bit. I don't know if it still is or not. Generally listen, people are excited because they may come to a deal on the debt ceiling, which look, they've come to deals on the debt ceiling at the last second before. This is nothing new. So they're happy about that. Then also you have to factor in the possibility of a Fed rate hike pause in June. They're happy about that. So people are liquidating in anticipation to play. They're playing in a lot of other places. Right now, if you have all that going on, obviously bonds are going to do very well, right? Bonds. So people are going to play. They're going to play for the opportunity, possibly in June, if they pause those rates where they possibly can make some disgusting gains with bonds. So yeah, you're going to have that. Dollar gets strong. Everything else comes down. Bonds can do well without rate hikes, et cetera, right? Okay. So we've seen this before. It's nothing. Once they start raising rates again, and once people have that realization of, oh wait, things haven't really changed that much as far as the circumstances with the terrible nature of the banks, and that's still ongoing. The problems with the banks are still ongoing. Commercial real estate, regular real estate, certain areas are trying to figure things out. There's still some very high home prices and things like that in certain areas, but there was a significant drop, I think, today. You look that up for yourself. So we'll keep an eye on that. So things haven't really changed by much. So I think that June, people will probably try to have a little bit of fun. And then July, if they continue to raise interest rates again, we go right back to the drawing board, right? And then there will be a retreat back to things like Bitcoin. You will see that flow come back in. It's just my humble opinion, not financial advice. I'm not a financial advisor. You got to make up your own mind. Okay. All right. But it's just my humble opinion. You'll see people retreat back to things like Bitcoin. That price will go up significantly again. Back to gold. You'll see that go up again. Platinum, silver, etc. Right. These stores of value, I believe, will go back up once people retreat from the markets again when they have a reason to. But keep in mind that, especially, let's say like gold and such like that, I mean, it was at a high. When we start talking about it and we got deep into it, it was at it was much lower than where it is now. So we're, so of course there was going to be a pullback sooner or later. And once again, when people come back, then it could go up once more. All right. But they're going to play. They're going to play. So now, this document here is from cointelegraph.com as well, and it's titled Ripple Case. SEC Hinman Docs could become public by June the 6th. Lawyer says. There's a lot of things going on right now. Let's read this a little bit here. The infamous Hinman speech documents are required to be unsealed by, they're required. Okay. Why do they say in the title could become public? It says they're required to be unsealed by June the 6th. According to a previous court order, defense attorney James K. Fallon says. All right, so it's official. There you go. It's about to pop off, folks. We're gonna see something. I don't know what. I hope it's something that's very, very good for us. All right. I'm ready to have an outright victory win. We've been holding the Spartan spears and shields for a long time. Let's read this little tidbit here. It says, defense lawyer and former federal prosecutor James K. Fallon expects the infamous Hinman speech documents to be released publicly by June 6, citing a previous court order. Hinman documents really, okay, we know what the Hinman documents are. It says in a May 17th Twitter thread, Falan, who has been actively following the SEC versus Ripple case over the past couple of years, provided an update on when the documents could be unsealed to the public. Quote, according to the court's 9/12/2022 order, the parties have 21 days to file public redacted versions of summary judgment documents, consistent with the sealing ruling. Okay, I see where you're going. June 6th is 21 days from yesterday's ruling, he wrote. All right. So now we have a date to put on our calendars if we didn't have it already. And we can look forward to that. It says another lawyer following the case, Jeremy Hogan, partner at Hogan & Hogan, noted the SEC has roughly 10 days to file an appeal to this specific order. Oh, no. Come on. Oh, they always have an opportunity to drag things out. Is it wrong that I didn't want to read that? I just want to hear the good news, but that's not reality, right? We have to stay balanced and know we have to know both sides, right? You can't really have wisdom without staying balanced. You have to know all the 360 degrees of knowledge, correct? All right. I would rather not have read that and just know that it's going to be released on June 6th, right? Oh, man. This is others in the XRP community, such as Ashley Prosper 1, believe that the prospect of the documents being unsealed could spur either side to pursue a settlement. That's definitely possible. I've heard others, iterate a similar sentiment as well. So, yeah, I believe that's possible, as they don't want certain things to get out if there's something significant in there, right? As they both may have information that they would not like the public to get their hands on. It says a tweet by Ripple CEO Brad Garlinghouse on May 16th, however, indicates Ripple is keen to see the unredacted. Let's go, champ. Let's go, champ. I want to see the unredacted Hinman documents. It says to be, quote, publicly available soon. All right. And then we read that little tweet there about transparency and all. All right. So we're going to stop there. Once again, Cointelegraph.com. They have a lot more here. They have some tweets and things of that nature. Make sure, check them out. Show them some love and support. All right. I hope all of you are doing well out there. Much love to everybody who comes by and, clicks like button, leaves a comment, watches the video, whatever it is you do. I appreciate you. Just know that. So this little tidbit here is from cryptonews.com, and it is titled, Ripple CEO accuses U.S. regulator of hypocrisy over its public crypto statements. I'll scroll down and read this little bit here. It says Ripple CEO Brad Garlinghouse did not hold back on Twitter in criticizing the U.S. Securities Exchange Commission for its hypocrisy and public statements about the cryptocurrency industry. Garlinghouse tweeted a meme, okay, from The Office where a character looks befuddled. Wait. Which one is it? In response, while adding a pointed message to the SEC on Tuesday. It's, quote, it says, the hypocrisy to be an unelected bureaucrat where you can prognosticate on your bully pulpit at all times, every week a new video or speech, and then say no one should rely on your statements as guidance. Yeah, he is making a very, very good point. Oh, that was it's a meme of Oscar. Is Oscar from Sometimes these memes are funny. Sometimes they're not. Sometimes they're funny. I used to love that show, The Office. Oh, man, that was a good show, That was back when I used to really watch TV. And it's been years, folks. I don't really watch TV anymore. I barely watch things on the internet anymore. I don't know. I just feel like I'm in a state of growth. So I'm constantly reading, constantly trying to learn, scrape up wisdom, from just different places. I find myself just wanting to know. Does that make some sense? Like, for instance, I'm not in the medical field at all whatsoever. I have nothing to do with the medical field, but I find myself reading a ton of medical books because it's giving my mind something to tear apart. I need my mind to tear apart a puzzle. This is one of the reasons I like research. Well, first I started out in the stock market, but I was tearing apart information, looking up executives' names, partnerships, deals. This is what I was doing over there. And then I brought it to crypto, and I'm tearing apart partnerships and who's this team? Who are these executives, CEO, COO? What do they do? You remember the beginning of the channel. And my mind feels good as long as it's putting together a puzzle. I don't know. So just video and TV just doesn't do it for me. Like for example, a lot of companies put out videos now or like podcast type of content to inform their investors and such. And I don't like that. I like to read. I need a transcript. I like a document because it allows my mind to tear apart the words. What do these words mean? Why did they say it? When did they say it? What's the context? Like, and I just don't feel that same way with like video or audio. I just don't. I'll take audio over video any day, though. Truth be told. Anyway, you're getting personal. What? Let's stay professional. Let's move on to the next article here. All right, we got so much XRP news today. Are you seeing this stuff? This article here is from U.Today, and it's titled, XRP becomes top traded asset on South Korea's Bithumb. I believe that's how you pronounce it, surpassing Bitcoin. Oh, I know they're waiting to feast too. There's so much good news right now. I'm surprised that they're not. That group hasn't come back to pump XRP again. I know they're waiting. They're very strategic. A lot of these groups that pump coins and stuff like that are very strategic. And you don't have to do too much to get people excited with XRP. I watch out for that. I really do. Maybe that doesn't happen again, but I watch out for that. It says here, according to CoinMarketCap, XRP has taken the top spot in terms of trading volume on South Korean crypto exchange Bithumb. Bithumb is one of South Korea's largest crypto exchanges with $205 million in daily trading volume at the time of writing and 170 listed cryptocurrencies. On the Bithumb exchange, the XRP/KRW trading pair accounted for 26% of all volume, amounting to $37,619,722 and remains the most traded asset, surpassing Bitcoin. XRP also took the top spot in traded assets on Upbit, South Korea's largest cryptocurrency exchange. The XRP/KRW pair led the pack, capturing 17.26% of trading volumes, or $149,157,173. The same can be seen on Corbit, another Korean crypto exchange. Notably, the XRP/KRW trading pair accounted for a staggering 44.4% of all volume on Corbit, amounting to $1,441,457. XRP trading volume jumped up on Upbit, Bithumb, and Corbit, which are Korea's top exchanges by volume, on the back of the token's current price increase amid the latest ruling in the Ripple-SEC lawsuit. Also, yeah, they want to make sure they're in. And when that lawsuit ends, I'm expecting fireworks. I could be wrong. I could be wrong. I'm just a humble researcher. That's all. I just break down the information, give you a few of my humble thoughts. That's all. But personally, I'm expecting an explosion. And although I can speculate, I don't know how high it's going to go. I hope it goes extremely high. Extremely high. I really do. I really do. You know, I try to take a more logical approach, and I think that in the future, that's where the real money lies. In the future, this happens in steps logically. Everything does. Everything grows. That's just life. But I do believe the first step could be a big one. That first leap, that first rocket could be a big one. So, we'll see. All right, so now let's move on to another article here. So this article is from U.Today, and it's titled, "We're starting to grow our XRP custodian business." This is from the PolySign CEO. It says here, an XRP advocate has shared an extract with a recent video interview of CEO of PolySign and Standard Custody Jack McDonald speaking about XRP custody. PolySign works in the same field of crypto custody as Medico. Is it me, or is XRP just outright just starting to just dominate on every level? Crypto custody company that Ripple acquired earlier this week Ripple's CTO provided an official comment on the choice made by Ripple and why it did not pick PolySign. So XRP business to expand. McDonald's stated that PolySign is starting to grow its XRP custodian business. And he is going to look into ways to land new customers. Do that, sir. Do that. Yes. We need all of this. Did you get to work yet, sir? Because you're on the clock. You're on the clock, sir. We're all about business right here. Get on that job. Bring in those new customers, all right, that's going to purchase lots of XRP. It says here, so far, I'm just having a little bit of fun, folks. It's been a hard week for old Alphaneem, so I'm starting to feel a little bit better, a little bit good. All right, so I'm having a little bit of fun. So XRP, quote, does not come to the top of mind, unquote, for them, McDonald's shared about the customers. Since these investors go for those assets that have a high market capitalization value. Let me pause there. Remember I was telling people that? And this is what I saw in the stock market a lot over there, at least back then. If you came talking about dollar stocks or what they call penny stocks, you would get laughed out the building, even though we made disgusting gains. A lot of those dollar stocks weren't dollar stocks for long. Not back then. No, they skyrocketed. But then you would get laughed out the building talking about dollar stocks. Well, at least in the environment that I was in. A lot of people are like that. This is what I'm trying to convey. This is what I'm trying to get to. A lot of people are like that. They don't like cheap stuff. They want expensive things. That price has to already be up there, which is interesting that it's like that. But that's how it is. And here you have some proof here. It says, since these investors go for those assets that have a high market capitalization value. He also mentioned that there are customers who want to find a reliable custodian for their XRP. I suppose. I think most individuals are custody their own XRP. I don't trust anybody with my XRP XLM, none of my bank coins at all. At all. They're not going anywhere either. I don't play with the bank coins at all. I'm here to the end. It says Ripple CTO comments on not choosing PolySign for partnership. As reported by U.Today on Wednesday, Ripple Labs crypto giant had inked an acquisition deal with Medico. So we know that. It says Ripple chief Brad Garlinghouse expressed his enthusiasm in a recent tweet about the acquisition. Okay, where do they talk about why they didn't choose PolySign? Oh, it says Schwartz responded that the two aforementioned companies are not exactly competitors. Medico is a technology provider and Standard Custody, which is their subsidiary, is a crypto custodian. As for PolySign, CTO wrote that a deal between Ripple and PolySign would not have been a good fit since PolySign's roadmap, quote, PolySign's roadmap deals in a different direction from Ripple's, unquote. Okay, all right. He provided no further comment on that. I don't think any further comment was necessary. Now let's move on to another little bit of news here. All right. So this is a little bit of Stellar related news, right? It's about Franklin Templeton. I just want to show that they're very bullish on crypto and they believe in the technology. And I believe that gives that creates the potentiality. I haven't used that word in a long time. Potentiality for them to expand the uses of Stellar, right? Their use of Stellar. I believe that. Let me give you an example of how bullish they are. It says Franklin Templeton to list blockchain fund targeting institutional investors. Let's read this little tidbit. Franklin Templeton, which has some $1.4 trillion in assets under management. This is who Stellar's hand in hand with. You know they have more big partnerships coming up to announce. They're not going to stop at Franklin Templeton. And just the fact they're dealing with Franklin Templeton, I know that brought in a lot of other partnerships. This is my humble opinion. Of course, I don't know that for a fact, but I feel that deeply within my soul that they have done that. It says plans to add to its crypto market offerings with a second blockchain fund, according to a Wednesday filing with the U.S. Securities and Exchange Commission. The Blockchain Fund 2 is a private equity fund and will carry a minimum investment of $100,000. The firm's previous blockchain fund, established in late 2021, was venture capital focused. The offering also differs from the firm's foray into crypto last year, which involved separately managed accounts, strategies through the investment in the 10 to 15 largest digital assets. The listing demonstrates the ongoing interest mainstream financial institutions are taking in blockchain and digital asset investments. And that's sort of what I was trying to get at here. Can you imagine what's going to happen in the next bull run or with regulatory clarity? Any of those things. I think crypto has a bright future. I really, really do. Well, the ones that are going to remain standing. It says Franklin Templeton has also been a proponent of the use of blockchain technology to support traditional financial infrastructures, processing transactions for its on-chain U.S. government money market fund on Stellar. All right, so I think that this definitely could go somewhere. I think that them being so bullish on crypto is great for possibilities for Stellar. No guarantees, but possibility, right? A lot of what I speak about, I deal with potentiality here. All right, so let's just read this little tidbit here. A little bit more Franklin Templeton news. This is from their news section here, and it's titled, Franklin Resources, Inc. announces month-end assets under management. We'll just read this little bit here. It's good to keep up with these companies that we're working with because at some point they could expand the use, and that some of that capital could flow through some of these bank coins, right? It says Franklin Resources today reported preliminary month-end assets under management of $1,420 billion at April 30th, 2023, compared to $1,422 billion at March 31st, 2023, which is good. So there wasn't too much change there, which means they're solid. They're good. This month's AUM reflected the positive impact of markets and flat long-term net inflows, which include a low-fee $3.2 billion equity mandate, offset by cash management net outflows. All right, so now let's move on to another article here. So here is an article from CoinGape.com, and it's titled, Just in, Hedera announces 182-year-old company as a new council member. It says, according to recent HBAR crypto news, the Hedera network has reportedly added a new organization to its growing list of governing council members. It says Kafra, which predominantly caters to the end user, has joined the governing council of Hedera and intends to create cutting-edge blockchain-based solutions on Hedera. This is very, very good. Kafra is a 182-year-old family business that employs over 60,000 people worldwide. It says initially focused on tokenization and bringing transparency in their supply chain process. The organization will supposedly make use of Hedera's proprietary token service, HTC, to issue or tokenize real-world assets. We also have heard Stellar talking a lot about tokenization of real-world assets as well, and that they're going to be making that a push for that at the Meridian that's coming up. It says, while speaking about the new development, the co-chair of Hedera's membership committee, Simon Olson, was quoted as saying, Kafra has a long, successful track record of building coalitions to tackle difficult problems, and we believe that they will contribute enormously to Hedera. Well, I definitely hope so. And I do feel Hedera has a bright future. It says lately, several projects and businesses across multiple sectors have joined Hedera Network. These projects utilize Hedera's core services, such as the Hedera Token Service and the Hedera Smart Contract Service, HSCS, to eliminate the need for intermediaries and achieve lower transaction fees. As already, the Hedera Governing Council includes representatives from a number of illustrious companies, including IBM, Dell, LG, Boeing, and a number of others. Okay, we're going to pause there. So I wanted to cover this article here because I was saying something recently about how because of the banking crisis, right, so to speak, and there's still so many that are at risk, even though I believe people are probably going to try to forget about that if, you know, interest rates are paused in June because people want to play. But anyway, because of the banking crisis, people were taking retreat to gold, silver, platinum. And then I also said cash. People are also retreating to Bitcoin as well as stores of value and to protect their value. But I had said cash in the video, and a lot of people took umbrage to that. They were like, why would people go into cash? Cash loses value and such. Listen, and I responded that, hey, I'm not in control of what people do. I just know what they're doing. I'm just calling it how it is. People were taking out cash. You got to understand, not everyone has the knowledge that you and I may have, where we understand that cash loses value. You know, the dollar loses value. It can increase in value. It's doing pretty good right now. It went up, but it also can come down in value. They don't know that. I don't believe a lot of people know that. So this article is from news.bitcoin.com. And it's titled, Investors Seek Refuge in Cash as Recession Fears Mount. This is from a Bank of America survey. So this is reputable. All right. So it's not just me saying it. So let's go here. It says investors are increasingly gravitating towards cash reserves, as indicated by a recent survey conducted by Bank of America, which characterizes this movement as a, quote, flight to safety, unquote, in the realm of financial transactions. Notably, stock exposure has attained its peak so far in 2023, while Bank of America further highlights that bond allocations have reached their highest level since 2009. Between May 5th and the 11th, Bank of America researchers conducted the survey by engaging over 250 global fund managers overseeing $650 billion in assets. According to the Bank of America poll, sentiment is souring and taking a bearish turn, with concerns looming over a possible recession and credit crisis. So approximately 65% of the global fund managers survey expressed a belief in the likelihood of an economic downturn. When it comes to the U.S. debt ceiling, a significant majority of the investors polled anticipate its increase by a specific date. However, even though those fund managers expect a resolution, the percentage of investors holding such expectations has declined from 80% to 71%. The survey notes investors are gripped by apprehension over the prospects of a global recession and the potential for a giant interest rate hike by the U.S. Federal Reserve as a means to quell persistent inflationary pressures. Fund managers also harbor concerns regarding escalating tensions among major nations. This is a good article. They're saying a lot of things that I usually iterate. And the risk of a contagion in the banking credit system. In addition, Bank of America's research revealed the most heavily populated stocks, with long tech trades claiming the top spot on the list. Among the other crowded trades were bets against the US dollar and US banks. Okay, we're going to stop right there. Once again, that's on news.bitcoin.com. They have a lot of good articles over there right now. You know, so show them some love, show them support, okay? This article is from thehill.com and it's titled Boomers and Millennials Fight for Homes as Housing Market Cools. I hope they tell the whole story. It says, prices have cooled in the once red-hot housing market, but competition is heating up between two generations in seemingly perpetual conflict. Millennials entering their prime home building years and baby boomers, many of whom are nearing retirement age, are vying for the same homes. Not all baby boomers are looking for smaller properties to spend their retirement years. Well, I'm going to say this, and this is separate from what they're saying here. It's a lot of builders right now have reason to build smaller homes. You can look that up for yourself. I'll leave it at that. Got to do your own research, okay? So, and some millennials are encroaching on space in the suburbs, where their older peers would typically downsize. But most boomers have a key advantage: substantial equity from previous home purchases and higher incomes, which help them avoid the growing cost of a long-term mortgage. Quote, boomers are not downsizing, and millennials, first-time buyers in particular, are buying later in life. This puts both generations of buyers in head-to-head competition for similarly sized properties, unquote. Jessica Lotz, Deputy Chief Economist and Vice President of Research at the National Association of Realtors, told The Hill in an email. Yet Lotz said shifting working situations created during the redacted, alongside high home prices, have changed buying patterns among generations. Quote, in addition, with the rise of remote and hybrid work and constraints on housing affordability, exactly, millennial home buyers are embracing the suburbs and even small towns, locations which have traditionally been the refuge of retirees, unquote, Lotz said in the email. All right, so we're going to stop right there. Once again, that's on thehill.com. We'll try to keep up to date with these things going on here. This article here is from npr.org. And it's titled Commercial Real Estate Property Offices Could Be a Risk to the Economy. It says here, the next big potential risk to the U.S. economy may be lurking in corporate towers across the country's downtown districts. With many people still working from home, companies are cutting back on so much office space that it threatens to unleash even more headwinds for the U.S. economy. An unraveling of the office sector spells trouble not only for banks that are owed an estimated $1.2 trillion in outstanding office loan debt, but also for countless small businesses that depend on white-collar customers as well as cities that benefit from the property taxes tied to office buildings. Good article so far. It's a troubling development for the commercial real estate industry at a time when the U.S. economy is already showing signs of stress and maybe even a recession. Here are some of the ways America's empty offices could further hurt the economy. Landlord defaults and foreclosures. Nearly 20% of office spaces are currently empty across the United States. It's a milestone that exceeds the vacancy rate during the 2008 global financial crisis, and it's worse in places like San Francisco and downtown Los Angeles, where more than a quarter of offices are sitting empty. If companies continue to give up their leases and if demand for office space remains sluggish, office landlords won't be able to collect the rents needed to keep up with the mortgage payments to pay off commercial loans, according to analysts. Then it says here, banks, and this is what I've been talking about, the relation to the banks, but I'll let them tell you. Banks will also feel the pain. Increased defaults and foreclosures would likely send tremors across the U.S. banking system. This is why we have to keep an eye on it. The bulk of the $1.2 trillion in office space debt is owed to smaller regional banks who are already at risk for a myriad of other reasons, which already, and they say it, which are already in turmoil from depositors fleeing to bigger banks. Over the past 2 months, 3 smaller banks have failed. That trouble has continued to spread as shares from PacWest Bancorp took a hit last week. Well, they said yesterday that it was doing a little bit better this week. This is what they're saying, right? That doesn't negate the other 722 that are at risk. All right. So, but listen, I'm trying to keep my mind well balanced here, right? Keep everything in perspective. If office landlords can't make good on their loans and ultimately hand over the keys, banks would need to find new buyers, a tough task when interest rates are high, credit is tightening, and concerns about the economy grow. All this has caught the attention of policymakers. All right. Then it says fallout could upend city centers. Soaring vacancies are already upending the ecosystems of downtown city centers. Dry cleaners, shoe shiners, restaurants, and convenience stores that have long depended on heavy 5-day-a-week foot traffic are struggling to survive. Right now, I'm getting it says, quote, right now I'm getting 4 or 5 customers a day. What? Oh my word. Unquote, says James Wallace Sears, owner of a shoe repair shop in downtown Los Angeles, adding that his monthly sales are down 85%. Oh my word. From before the redacted, quote, I'm here now starting up again to see if it's still going to work, but I don't know. Wow. It says landlords desperately, I'm just reading little pieces of these sections here. Once again, so on npr.org, make sure you check them out for the full article. So landlords are desperately searching for solutions. The commercial real estate market has a few good options. Okay, we're going to leave off right there, but holy smokes, man. I hope everyone out there is doing okay. That is definitely an eye opener. I wouldn't have thought that an individual would have lost that much business. Wow. All right. Well, here's another article from Cointelegraph.com. I just want to read this little tidbit because we've been trying to keep up with this. And it's titled, Zimbabwe sells millions of gold-backed crypto tokens despite IMF warnings. Listen, this is another reason why gold is going to go up. More gold-backed crypto tokens, right? Then you have, so like Zimbabwe's doing that. You have BRICS nations trying to come out with a common currency that's probably going to be backed by gold. How's that going to affect gold's price? You have Texas trying to come out with gold-backed digital assets. And other states as well trying to do the same thing. So all of this will affect gold's price in the future, in my humble opinion. It says, the Reserve Bank of Zimbabwe's first gold-backed cryptocurrency sale has been a success. The Reserve Bank of Zimbabwe has sold 14 billion Zimbabwean dollars worth of gold-backed digital tokens, worth around $39 million, despite a warning from the International Monetary Fund. The Central Bank of Zimbabwe announced that it had received 135 applications for a total of 14.07 billion Zimbabwean dollars to buy the gold-backed cryptocurrency. So I'm going to stop here, but these are one of those tokens where you have a lot of different types of gold-backed tokens. Some of them, it's just pegged to the price of gold. And then some of them are actually, they're not only pegged to the gold, but you can get like a certificate that you own the gold. So that way, if you ever wanted to redeem the gold physically, you could have that gold sent to you physically. I think this is one of those things here where you could have the gold sent to you physically, right? If you wanted to, but you don't have to. But they send you the certificate so that you always have the option. Don't quote me on that, but I think that that's what's going on here, right? From other things that I have read. All right, so now let's end off. We're going to end off today with a little bit of gold news, okay? So this is from investing.com. Let's just read this little tidbit here. It says, investing.com, gold investors running for the door on the likelihood of a U.S. debt ceiling deal being struck by the weekend should stop and consider the longer-term benefits of owning the yellow metal, analyst at UBS said on Thursday. Quote, we continue to see gold hitting $2,100 an ounce by year end and $2,200 an ounce by March 2024. I would love it. Look, we got into gold at a low. This was like October, November last year. We went super heavy in gold. Like we always had a love for gold, but we went super heavy in gold at that time. And still looking good, in my opinion, still looking good. So 2,100, 2,200, I've heard a $3,000 price gold could go to. I'm just going to stay on top of the catalyst and we'll see where it goes. As of right now, everything looks good. People are going to leave a little bit to go play because you're going to have a pause in the interest rates. That's going to, so if you have that, people are going to play in the stock market, crypto, things like that. Bonds are going to do a little bit better, of course. You have a strong dollar today, so that also crushed things. So that's going to squeeze people out a little bit. It says, quote, we think gold should remain a hedge within a portfolio context. That's how I look at it. You know, it's to protect my value. So I'm holding that for a long time. That's not something I play with. It says, with our analysis showing that around a mid-single-digit percentage allocation to gold in a balanced USD-based portfolio would have improved risk-adjusted returns and lessened drawdowns over recent decades. There are 3 reasons to buy gold now, UBS research team said. Quote, the gold price has come off from its recent high as U.S. President Joe Biden expressed confidence in avoiding a government default amid progress in the debt ceiling negotiations. Better U.S. data and hawkish comments by some Fed members, unquote, said the team, which noted that the market was at least 4% lower than the record high. This is where we're coming down from. So like I said, there was always going to be a little bit of a pullback. This is why it's important to read the charts. Read the charts, and getting at a low is the best thing to possibly do, whether it's gold, crypto, or stocks. You get in when things are at a low, right? And after everybody retreated, after the banks were having those problems, of course, everything was going to be very high. You had a lot of newcomers to gold at that time. But let's continue here. It says, but the UBS analyst has also pointed out that the yellow metal remains around 8% above where it began the year. This is what I was saying before. So like for a lot of people who got in early and got in at a low, still looking pretty good. Not still looking really good, actually. So it's, quote, we think it's likely to break its all-time high later this year with multiple mid to longer term drivers, unquote, they added. Among the factors Girding for higher gold prices was central bank demand. Remember, we covered all of those articles the first few months of the year, where central banks have been buying record amounts of gold. I don't think that's going to stop anytime soon, because the world right now, as it stands, and I could be wrong, it looks like the world is going to be moving away, at least trying to move away from fiat currencies. They're looking at commodity-backed digital assets right now. We'll see if they can actuate on that and really bring it to life, but that's what they're attempting to do. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.